And I don't know. We can try this a couple of times, see what happens.
All right. Welcome to Two Stupid Guys Trade Stocks. I'm Vinny.
I'm Dylan.
And we are starting this channel to kind of help you guys learn a little bit about stocks along with us as we figure out, our little misadventures in self-directed investing.
And make money, more importantly.
Yeah, exactly. You have to be in the game to win the game, right?
Exactly. Yeah.
Exactly.
Ooh, we have stars.
Yeah, fancy. All right. So.
Okay. Is this your mouse?
Can you see my mouse?
No.
Okay. What do you mean? What's my mouse then?
I'm an idiot. You're good. It's mine.
All right. So a little bit about our prior, investing returns, AKA why should you listen to these two stupid idiots on the internet? To
establish credibility, if you will.
Yes, exactly. So my past 3 years' performance are listed over there in the right-hand column. And we have the S&P kind of listed down here in the middle. And that includes dividends, which is an important topic we can discuss later. And then the left-hand column here is Dylan.
Yeah, so if anyone has Robinhood, they understand that if you have past year's performance, it's impossible to know what you got a return for if you added money at any point. So I have 4 years history in Robinhood, but the first year and a half, I had $500. And then I added 10,000 and then 5,000. So everything is completely skewed because it shows that you always had that money. So it's impossible.
Charles Schwab kind of will do the same thing too, but you just have to record your account balance and keep it separate.
Yeah, there's a way to do it. I figured we'll just show our graphs and it's way easier.
Yeah, exactly. All right. So a little bit about me. I'm really more of a value investor at core. Warren Buffett is kind of my idol. I really love to look at distressed assets, kind of similar to Warren Buffett's investment style. I look for great companies that have had a short-term kind of hiccup in their financial picture and try to take advantage of that. I'm very much willing to wait to be right, even if it takes a few years. It's nice to be rewarded quickly, but over time is really how the big numbers are made, at least in my opinion. In the interim, while I'm kind of waiting for those longer-term deals to come across, I do enjoy trading on options. Pretty safe option strategies, basically covered calls and cash-secured puts, something we can talk about a little bit later. But I like to take advantage of my money while it's sitting in my account and wait for opportunities that way. My whole kind of goal with self-directed investment is to hopefully, achieve financial independence, and I'm aiming to retire around age 60. So most of my investment funds are allocated towards, more traditional retirement accounts, IRAs, Roth IRA, 401k, that sort of stuff, as I don't really anticipate using much of it before age 59 and a half. And this year so far, I'm up 5.71%, which for me is a pretty solid month. I mean, that would be more than a 60% annualized return, which is utterly fantastic. I mean, Warren Buffett became the wealthiest investor of all time, earning somewhere in the low 20% annual compound rate of return. So this is anywhere approaching that I'm happy with.
So are you saying that you're better than Warren Buffett, Vinny?
No.
I just want just for a record on the channel.
Well, to a certain degree, we're kind of at a competitive advantage, right? Because it's much easier to grow, $60,000 at 20% or whatever than it is to grow the $500 billion valuation of Berkshire Hathaway at 20%. I mean, he has to find $100 billion a year to grow at 20%.
Yeah, whereas, what a problem for him.
I know, right? I'd have to find another $12,000 to grow at 20%, which is much more manageable.
What a horrible issue he has.
Yeah. I mean, it's true. I think it highlights the fact that there's a lot of opportunities available in smaller, companies that some of the larger, kind of folks can't even touch because they just simply it wouldn't move the needle enough for them.
Yeah, it'd be a lot of work for a little return.
Yeah, exactly.
Yeah.
So, And this is my graph of my portfolio here over the last 2 years. Charles Schwab only allows you to display a graph for 2 years. I tend to kind of follow a more steady pathway, with the exception of this lovely gyration back here in 2020, year that shall live in infamy. I was pretty heavily invested in Boeing, kind of pending the 737 Max.
I forgot about that.
Reinstatement of flight. So, this
and 3 plane crashes.
Yeah. That was rather entertaining year. But it's turned out all right. I ended the year up, and I've kind of come back on more of this smooth trajectory up here towards the latter couple months of 2020 and the beginning of 2021.
All right. So the reason why this channel, we thought that it would be interesting is because me and Vinny disagree on almost every possible aspect of trading. For instance, I think value investing is dead. I think Tesla's valuation has successfully killed that, as well as any startup EV company that's happening right now. Vinny put the once attempted to shovel snow with the frying pan into the video. That's not a lie. I did. I was new to snow. I moved from Arizona to Rhode Island, and I didn't think things through that I would need a shovel. So, also, little fact for you: if it snows a lot and then it rains, the rain doesn't melt the snow; it just turns it to ice. If you guys were wondering. So I see myself more as a technical analyst, and I'm more of a swing trader. So I'm the opposite of Vinny. I'm not patient. I'm American. I want my money and I want it now. I want the cash now. All right. My main financial goal is to save for retirement with a target of age 40. We will get into fundamentalism and technical analyst. Vinny is very much a fundamentalist, which is fine. Every single trade that I've lost is, I think, a fundamentalist trade. So
yeah,
most recently AMD.
AMD, I think, is pretty well valued right now from even from a fundamentalist standpoint. Okay,
yeah, that's what I thought too. Yeah, I was wrong.
The problem is you have to be more patient than you. You have to wait sometimes 2 or 3 years to be right.
I'll give you 3 weeks. So,
yes.
My year-to-date return. I had a really good Thursday and Friday, so it's actually 23%, but 18.63%. Just to put this in perspective, though, I will have months where I have like a 30% return and then a negative 20% return the following month. So it's not like I'm a lot better than Vinny. We actually are almost very similar in total returns. My way is more stressful. I lose a lot more sleep, but I think that I can eventually turn it into more returns, hence the channel. So, yeah.
Yeah, I mean, I can't wait to talk to you a little bit about value investing. And
that's bad.
Yeah. I mean, corporate profits have absolutely nothing to do with the company's eventual valuation.
Tesla, apparently, I agree. I don't think that it should be dead. I'm just saying Tesla should not be worth more than Ford and Toyota, GM combined. That makes no sense to me.
Yes. You say that until they start charging you $200 a month for their self-driving capability in about 15 years when they've saturated the market with their vehicles. Because that's what's going to happen.
I might be dead in 15 years. That's too long.
You best change your target age of retirement then if you're going to be dead in 15 years.
Oh, my God. My Spotify just turned on. Okay. Sorry. It was really loud.
I didn't even hear it, actually.
Oh, nope. It was in here. It's full volume.
Perfect. All right, man. Let's go to the next slide here.
Okay, so this is my Robinhood graph, and this is the story of what margin can do on a good day and a bad day. Vinny, can you hover your arrow over the first increase there?
This one? Can you see my arrow?
I actually can't see your arrow.
Yeah, I didn't think you'd be able to.
Can you see it? I can now.
Okay. There
we go. So if you look at the first increase, that was kind of.
Wait, this arrow?
Yeah, there you go. That arrow.
Ah,
If you look at the first increase there, that is the story of a well-known company called MoviePass. And it worked really well. And the problem was I was new to trade. I'm like, this is really easy. I made 40 grand in like a month. I didn't even try. So then I got real cocky with margin. And it turns out you can actually lose money just as fast. So this dip here. How do I get my arrow in here?
so dip here? I don't know.
No.
It's because I'm sharing the screen that I can see it.
Okay. So the dip all the way at the bottom, like the really low. Yeah.
Where the red is.
Now that's Corona. That one right there. That's called
Okay.
depression.
Yeah.
Yeah. So that's yeah, that wasn't good. That was, I think I was at like negative 40% return. But anyways, you learn from your mistakes. I go up, I keep on increasing very steadily, using margin like an idiot. And then I got to Corona, which he also had an equally horrible thing.
Yeah. Did yours also be related to Boeing, perhaps?
No, mine was directly related to margin again. So I went from like a cool 45 to 11,000, and then I stopped using margin and I swing traded my heart out, and now I'm back to 100% return.
Yeah, it's pretty nice there. It's almost like Wall Street bets worthy.
Yeah, it was very stressful. So the problem with so I added a position at the margin call at the red arrow. That's because they were like, hey, all your money's gone and you're still borrowing ours. I'm like, well, this is a bummer. So basically that's how all the percentages get messed up, because as you can see at the white arrow added to position, I was at a 98% overall gain, and then I put in another 10 grand. It brought me down to 68. So that was in November, which was 3 months ago. And now I'm back to this is 93. I'm actually at 102 now, but 93% overall.
Nice. So yeah, November was a great time to add extra money to the market. It turns out, like, it looks like over the last few months or so, performance.
It was, it was. It was solid timing.
Yeah,
it ruins the statistics, but
yeah, I know.
This is just the last 12 months to show the huge dip with the Corona, and then the steady increase. Not too much of that is margin. I no longer margin more than 30% of my total money. I used to do 100. So now that's my rule. But 38% return for the year.
Yeah, it seems reasonable. It's also nice to know that, like, if you actually come across an opportunity that seems like utterly fantastic, you have more ability to borrow. Then you're not tapped out by already having 100% margin capability.
Yeah, I'm not good at holding cash in my account at all. I'm awful at that, actually.
Yeah.
One of my goals. The 10 grand that I invested, that I put in, that was supposed to be cash on hand. It lasted 2 days.
Oh God, I've had like 40% of my portfolio in cash for like the last 2 months. So
man, I can't do it. I see too many opportunities. I'm like, well, it might work. So
it might work. I guess you're not a believer in that fact that the most important aspect of long-term financial growth is not losing your money.
I mean, technically, if you look at the bottom of, after this thing, I had a 500% gain in a year if we start at March. And that was you just don't sleep and you just study the market.
Yeah, it's perfect.
Kind of worked out.
Yeah, man. Should be fun. I'm looking forward to learning a little bit of your methodology, or lack thereof.
Looking forward to patience.
Yes, patience. All right.
You say lack thereof for methodology, you ass.
Hey, no swearing.
Oh yeah, shit.
Oh God, family friendly show here, folks. All right, so a little bit about our goals with this channel. Actually, We really, Dylan and I, although we disagree about many things when it comes to related to how to invest, we both adamantly believe that it is one of the most powerful tools available to, the average folks, basically, in terms of increasing your own net worth and putting yourself in a position where you're financially stable and able to contribute to various endeavors and, change your family tree even, or, help out in any avenue in terms of, kind of, what's the word I want to say, charitable deeds you choose to do so.
Yeah.
Yeah.
In short, make that money, honey.
Exactly. You got to be in the game to win the game, right? So we're going to talk a little bit about, a variety of different stock trading, kind of techniques, from simple long positions and swinging in and out of things, and then also general financial well-being and strategies around like personal finance, saving, where to allocate your money, that sort of thing. And Dylan, I don't know if you want to read the last 2 points here.
Yeah. So the cool thing is, for instance, we have very different attributes, but as of like 2 days ago, we're almost at the exact same return over a very similar timeline. Granted, I had another year in the beginning where I just had like $300 in Robinhood. And I didn't do anything. It just sat there. I was too busy. But we're at almost a very similar position. Vinny is a little bit ahead. But we have completely different methods. So hopefully this is a little bit for everybody and we can learn from each other and try to increase our financial freedom. One of the segments that we're going to try to start is I'm going to go over weekly, and Vinny will probably go over monthly positions because he's better at a longer time frame than I am. I'm just not that good at it. Weekly positions, that's how I got the massive gain for the year to get me back to where I was. I don't typically hold a stock for more than a month, unless it's like a long-term play, like Carnival Cruise Line or something. But also, invest at your own risk. It's entirely your call. I'm just going to say what I'm doing. I usually just put in what I want to buy a stock at and what my stop loss would be. But yeah, we're going to start doing that every week.
Yeah. So thanks for joining us. And if you guys would like to kind of stick in with us, or stick around with us on this whole little mission we have here, please like, comment, and subscribe so you'll be notified when we post more content. We really appreciate feedback. Dylan and I are not seasoned YouTubers. We're just like two guys like to trade stocks and harass each other about how we do it. So please give us a comment about how we can improve our production, quality, and like sort of stuff you guys would like to see us do or talk about. We're really trying to help build up like a little ground up community here of financially savvy folks that are interested in have skin in the game. Isn't that right, Dylan?
We want everyone to be rich. Yeah,
exactly.
Pretty much. If you could just watch our channel and be more financially well off than before you watch the channel, that's really our entire goal. And kind of summarizing it, we just want everyone to be more financial well off. We're going to be teaching each other, learning from each other. So,
all right. Yeah. Well, thank you guys for your time.
Have a good one.
Bye. See you next time.